Welcome to the Daily Update, where I'll go over the action in the market for Monday, October 30th, and then we'll see how things look for Tuesday, October 31st. We had a bounce. Right now, it just looks more like a technical bounce. We do have positive seasonality. Monday's session was pretty positive historically. We're also coming into a positive time from now until the end of the year, where things do switch back more positive on a historical basis, but we're really not seeing any confirmation of that in our charts. We also didn't really see an explosive move up. When we usually hit a bottom, we go really strong to the downside. We wash everybody out and then turn and then move in the other direction. We didn't see that in Monday's session. In fact, we are still below some major support for the S&P and other indexes. We regained a few levels that I'll show you, but the one that I was watching is the NASDAQ 100, and we're still well above the 200-day moving average. And it'll take something like that for a significant bottom to be put in place if we go according to what usually happens. Now, there's the other side of this where things can switch back more positive in a more stealth manner and then start to take us higher from here. And that's why we watch a plethora of different charts to try to see what's happening. We're not really seeing that happening yet, although we are seeing some improvement. We've worked off a lot of the oversold condition in the short term, but we're still mainly negative when you take the big picture together. Let's go back and talk about what happened. At the open, we had a higher open, and the futures were positive. We were up anywhere from 0.5 to 0.75% during the night before the market even opened, and then we just continued with that right at the open. Prices climbed above R1 at 41.48, and then we pulled back below R1. Then prices eventually broke through R1 and were able to climb up to R2 at 41.79. And then we ended up closing down off of that just a little bit below R2. But we were up 1.2% on above average volume. The volume has still been quite healthy for right now. Our technicals, and I'll go through this with all the charts, we are mainly negative still. You could kind of look at this point as just a dead cat bounce where we've been going down pretty severely. Things over the weekend, they didn't get as bad as some people had hoped, especially with the situation in Israel. It still seems to be confined within the region for right now. And so that kind of helped things a little bit, but I'll go through some different points that we can talk about in Monday's session. The advance was broad-based. Now, that is a positive sign. We saw a lot of stocks that have really been beaten down. They ended up going up, and mega caps also did well, but it was not a real explosive move to the upside. The Bank of Japan ended up leaving rates unchanged, and they revised their inflation forecast for this year and next year, and they're revising inflation to look up from here. Oil did close down at 82.24. That helps support stocks. The micro caps were up, but they're still near a new 52-week low. And you can see on a short-term basis, our list is pretty short now. We have the CCI 20 and the stochastics. We had a pretty long list before Monday's session. We still have kind of a long list when we look at the intermediate term charts. We have the 50-period exponential moving average study, the Arun, the PMO studies, the Sean trend meter, and the bullish percent indexes for the S&P 500 as well as the NYSE. On a long-term basis, we're still getting extreme negative with our 150 and 200-day moving averages. And this is the same scenario that I've just been harping on for the last couple of months. The market is concerned that the economy is stronger than expected, and this idea that they're going to have to keep rates higher for longer, that's still persisting. And if we do show some strength, they may even have to raise rates. Keeping an eye on the economy in China, keeping an eye on what's happening in Israel, keeping an eye on oil prices, and then we're in the middle of earnings season. The dollar was up and interest rates were up, and these put a little bit of pressure or headwinds in stock prices in Monday's session, but didn't seem to have that big of an influence. And the 30 to the 5, the 10 to the 5, those are back to being normal. I have the charts to show you where the 10 to the 2-year and the 10 to the 3-month are still inverted. Sentiment did tick up. We had become extreme negative at 24. That's below the 25 level. We bounced up to 31 after Monday's session. Our trend is still negative, even though the red line's coming down. It still is on top. The ADX is still getting stronger. It's above 20. It's above its moving average. Our bias, I'm still keeping it a little bit at negative right now, even with the up day. It just wasn't all that convincing, at least based on the charts that I saw. Now, I could be incorrect in that. And if we see some more follow through to the upside on Tuesday, yeah, then I'll probably switch back more to a positive stance. But for right now, I just wasn't convinced. And our momentum over the last 2, 3, 4, 5 days, that continues to be negative. We didn't get any economic reports in Monday's session. We closed at 4.86%, just up a tick from what we saw last time. And this is still above the 4.02% where this could be biting into company earnings. Here's the intraday chart where we gapped higher. We got above R1 right off the bat. Then we fell down. We weren't able to fill the gap. We kind of came back down to this level where we opened, and that ended up being the low for the session. We chopped sideways. There wasn't an awful lot of conviction, either up or down. We finally were able to break above R1. We got all the way up to R2 and then fell back slightly going into the close. Looking at large cap growth and value, we saw some improvement, but you notice the red lines above the blue line. That means that value outperformed growth, not what we want to see in a real solid environment. We look at this chart, the S&P growth to value, it was actually down. And that's another kind of warning sign that showed me anyway, that we weren't really convicted with things going to the upside. Now that can always change. We just have to go with what we see right now. On an end of day basis, we did decline with our growth to value ratio for the S&P, and that's not what you want to see on an up day. Looking at discretionary, it did come back up just a little bit, but now we're in a more solid downtrend. Staples are also in a downtrend, and we ticked up just a little bit with our ratio, but we're still in a longer term uptrend, but we've been seeing some more recent weakness. Here's the condition of our trend. The ADX is above its moving average and we're above 20. That suggests that the trend is getting stronger. We default to the negative because the red line's on top, but it did decline with the up day. The green line's on the bottom and it ticked up just a little bit. So not an awful lot of change there. In the short term, we're also showing a stronger trend. Red line on top, even though it declined. Green line on bottom, even though it advanced. We're still keeping an eye on the VIX. We're starting to come into the latter part of October and into November now, where maybe we're topping out with the VIX again, and we could see that begin to come down. That would be positive for stocks. The Ulcer Index, though, continues to go up, showing that there's an increase in fear. We did drop below 20 with the line chart with the VIX, as well as the bar chart of the VIX. And volatility is coming down a little bit with the up day. We're coming down into the moving averages now, both with the bar chart and the line chart. The VIX to VVIX ratio continues to go up. That's longer term negative. The VIX to 3-month average of the VIX continues to go up. That's also negative. The VIX to move ratio declined a little bit, but we're still above an advancing moving average, showing that stocks are more volatile than bonds. The equity put call ratio based on 5 periods continues to go up. That's negative. The longer term 253 period moving average of the equity put call ratio is also going up. That's longer term negative. We ticked up just a little bit with this fear chart, and we're also continuing to go up just slightly with our other fear chart. And this is another sign that, okay, maybe it's not all that strong, at least yet. The risk on risk off ratio continues to decline, and we were actually down in Monday's session. The mass index, this is looking right now like a false signal. We never made it up to the blue line before we started to turn down. I'll watch this. If we drop below the red dash line, I'll stop showing this chart for a while. The advanced decline line based on price ticked up a little bit as well as volume, but we're still below the moving averages. We're still seeing more new lows being generated than any kind of new highs. So we're continuing to fall with the 5 period and the 10 period. The advanced decline ratio ticked up a little bit, but we're still below 0. Accumulation distribution also ticked up a little bit, but still below the moving average. Jake and money flow ticked up just a little bit, but continues to be in a downward trend. we came down to this level and we're bouncing back up to this pivot point now, but this really isn't all that significant of a level of support for the S&P anyway. You could go back to this previous low that we hit, or the support level that I had drawn on here, and there are some fib levels and so forth that we could use to justify things bouncing back up. But it doesn't seem to be a real strong place of support right now. And then on the bottom, we were above average with volume. We're continuing to remain above average with volume. The CCI 20 did turn up a little bit, but is still extreme negative. We turned back up with the 20-period exponential moving average. We're still extreme negative with the 50-period, and we're turning back up just slightly with the 200. The force index did show some improvement, but we're still below the midpoint and still below zero, so it continues to be negative. The short-term stochastics are just coming out of being extreme negative. We're turning up, but still extreme in the intermediate term and just rolling over a little bit to the upside in the long term. The boom indicator is no longer extreme. We got back above the 20-period moving average, back above the 50, and we're still negative because we're below zero with the 200-period moving average study. The Arun is actually going sideways now. It's still below zero after it was giving us an extreme negative reading. I'm not sure where this green bump up really came from. We were going down when that happened, but that's the way this indicator works sometimes. We saw a bit of a bounce up with the cumulative NYSE advanced decline line, but we still have a long ways to go to repair things. And we ticked up just a little bit with the other NYSE advanced decline line. We're still breaking below support with our other NYSE advanced decline line, and we generated a death cross after Friday when we look at the trend of the advanced decline line. This is positive, though. The Swenlin trading oscillator based on price and volume, this is the third day in a row now that we've seen this indicator starting to go back up. We're not seeing an awful lot of confirmation of that in other areas, and sometimes this does lead us ahead of what happens, but other times it can also lead us astray. So we want to see other confirmation. The go, no go system is still negative with the deep purple. TTM squeeze continues to decline. Balance of power ticked up a little bit, but is still well below the dashed midpoint. And we're turning back up just a little bit with our highest high, lowest low value, but the midpoint is continuing to decline. We're still below the 200-day simple moving average. And we came down to this little bit over 11% retracement. And I do this intraday. That's why the figures that I have are a little bit different than what you may read elsewhere. But we are bouncing up off of this, and this looks like, okay, maybe we're starting to go back up. But we need to see more confirmation first. And the vortex continues to be negative with the red line going up and the green line going down. The Copic curve is also negative and in a decline. The ease of movement continues to fall. That's negative. We're still going down with the bullish percent index, and we're continuing to decline with the summation index based on price. We're coming down to this previous low, and we're also falling based on volume, where we haven't reached this previous low. And the NYSE summation index based on price and volume continue to decline, and we're coming right down to this previous low where we were at not so long ago. We switched back to neutral for the Elder Impulse system for the S&P. The standard deviation, and again, this is not measuring direction. This is just measuring speed. We had become quite extreme after Friday's session. Well, we're coming down just a little bit, but we're still getting a pretty extreme reading. The RSI based on 14 periods is still negative, even though it turned up, and we're no longer extreme with the RSI 9. On balance volume ticked up, but we're still below a declining moving average. We turned back up a little bit with the 200-day moving average study for the S&P, as well as the 50-period moving average study. We're coming back up above this 100% retracement level. This was at about the 4120 level. And so that's positive for right now. If we can maintain this and then go up off of that, that might be a support level. Longer term, we're coming back up to the 50% retracement level. We ended up closing pretty much on this. The close was at 4166. This 50% retracement is at 4166 as well, actually 56. So we're a little bit above that. We're still below this longer term fib line. If we need to break through this, and these are double fib lines based on multiple studies, we need to really get through that and then close above that to turn more positive. And we're coming right back up to this resistance level with our quadrant study. The Pring bottom fisher, yeah, it's still generating a buy signal, but now it's starting to roll over. In another day or two, that probably should go away. We're still negative on a momentum basis. When we look at the PMO, also based on price and volume, we ticked back up a little bit with the PMOs that are rising, turned up a little bit with the buy signals, and we're still extreme negative with the PMOs that are above zero. We're getting more extreme negative now with the NYSE bullish percent index. If this will finally bottom out somewhere and then turn and come back above 30, that could be quite positive for the broader market. Seeing kind of that same thing with the NASDAQ 100. The BPI just came down a little bit above 30, and now we're starting to bounce up. Is this enough to be rather significant? Right now, it's unclear. On a momentum basis in the short term, our slope oscillator continues to decline, and we're starting to get down to an extreme negative reading. The MACD is also more intermediate term, suggesting that momentum is negative. So we continue to go lower with all of our different oscillators. We're still well below the 200-day simple moving average. We did recapture this, and this is kind of positive. The anchored moving average, going back to the all-time high, we were able to close back above that. And we're no longer extreme with our standard deviations chart. For 2 days, we were in the -3 area. We've climbed back up to the -2 area. The Chaikin oscillator, after getting just barely extreme, is starting to bounce back up. The money flow was pretty much flat, tried to turn up just a little bit here, but is still negative and below 50. The ultimate oscillator, after barely getting extreme, is starting to bounce back up. The Sean trend meter is still extreme negative. And we're still negative with the parabolic SAR since the dots are on top. We were able to recapture this blue trend line here, which is based more around a textbook definition of how to draw trend lines. So that's somewhat positive. But we're still extreme negative with our 150 and 200-day simple moving average study. We're looking more negative with the special K daily chart. And we bounced back up with the Dow. We bounced a little bit with the transports, and we just ticked up slightly with the utilities. But the transports continue to underperform the Dow, and that's not positive. The transports to S&P 500 ratio ticked up just a little bit, but is in a stronger decline. And the Dow continues to outperform the transports, even though this ticked down slightly on Monday. The Zahorchak is still coming off of a strong buy signal. It's falling back down here. It's still positive, and we could get back up here, but it's going to have to take some pretty solid price movement. The Staples to S&P 500 ratio, it's now going up, which is negative for the S&P. Where the S&P to the utilities ratio is going down, that's also negative for the S&P. The 10-day average of the S&P highs minus the lows after getting extreme, we were showing some improvement. Now we're continuing to decline. If we see more weakness in this, we could get to another extreme negative reading. The 19-day exponential moving average of the advanced decline ratio is still showing a little bit of an improvement after going extreme, both based on price and volume, but they're still negative. And we're right near the 52-week low for the micro caps. We're negative with the hike in ASHI. We're negative but pointing up with the KEGI chart. We're negative with the Renko, and we're negative with the 3-line break. The equal weight ticked up just a little bit, but is still really underperforming the S&P 500 weighted index. And this is the ratio between the S&P 500 and the equal weight index, showing that the mega caps are continuing to do well. Now, you can see that two ways. Positive, because that's really what's been leading the market higher. Negative, because it's just a smaller group of stocks that are holding up right now. The Dow was able to recapture this pivot level. That's somewhat positive, but we're getting really close to a death cross. The diamonds have switched back to neutral after being negative. And the NASDAQ 100, this was the area I was watching for, the 200-day simple moving average for the NASDAQ 100. We're still well above this. Now, we may not even come down here, but this was like the last line of support that I was seeing as we were slicing through other areas of support on other indexes. And maybe this is far enough, but for right now, we're going to be keeping an eye on this. We switch back to neutral for the QQQs on the Elder's Impulse system. We're still negative on a momentum basis with the NASDAQ 100, and we're coming just a little bit back up below the 61.8% retracement level for the NASDAQ 100. The longer we stay under here and then try to come back up, the more this is likely to act as resistance. The NASDAQ is just right back up to its 200-day moving average. And the NASDAQ is still bouncing up off of this 38.2% retracement level, but it has a long way to go back to get to the 50% level. The small caps are still in a downtrend overall. This pivot level so far has held up as we bounced up off of that. We're turning up just a little bit with the RSI after being extreme with the Russell 2000 index. We're still working off of a death cross. We still show that momentum is negative, and we're still below this other level of support that we broke through last week. The small caps have switched back over to neutral after being negative. The mid caps also bounced back up above this pivot level. That's positive, but we're still working off of a recent death cross. And we switch back to neutral for the Elders Impulse system for the mid caps. The FANG index was up 1.31%, but it's still below its 50-day moving average. But longer term, it's still in an uptrend. And we're coming back up to these other previous lows here. Now, these were intraday lows, and the fact that we were able to get back up above these and close above them, that could be positive, but we need to see a lot of follow through. On our arithmetic scale, we're still underneath this longer-term trend line going back to 2009, but we did bounce up slightly. And looking at growth versus value, where we ticked up when you compare the QQQs to the S&P, also ticked up a little bit with discretionary to the S&P, and that's encouraging because discretionary has been quite weak lately, and large cap growth did outperform large cap value. When we look at the large caps, seeing some improvement, a little bit of a tick up with the mid caps, but pretty much flat when we look at the small caps. Our longer-term 50-period exponential moving average of the new highs minus the new lows continues to decline because our indicator is below zero, and that's dragging the 50-period exponential moving average down with it. Looking at the 50-period moving average study for the S&P, we ticked up just a little bit, but we're really close to this extreme negative reading. With the mid-caps, also, we're just a little bit off of being extreme negative, but have not generated one yet. And the small caps also ticking back up a little bit, but not quite extreme negative. The broad market range of the 5-period moving average of the highs minus the lows, they continue to decline, even though they ticked up just a little bit. The dollar continues to be in an uptrend and was up in Monday's session. The financial sector just generated a death cross, and even though it ticked up, is still well below its 200-day moving average. So far, though, longer term, the financial sector support level is holding. We came down to this level and bounced up off of that. Well, this is another area we're watching. We look at interest rates where they were up slightly in Monday's session. And then when we look at the 30 to the 5-year, this is continuing to look more normal, as the 10 to the 5-year is also more normal. We're showing some improvement with the 10 to the 2, but we remain inverted. We're also showing a little bit of an improvement here with the 10 to the 3-month, but we're still inverted. We're still getting a positive answer when we take the 10-year yield in the U.S. and subtract the German 10-year yield. That's this line on top that's going up. The dollar's continuing to go up, and the correlation between the two is quite strong, which tends to be more negative for stocks. This is the last time we'll be able to look at the research for October. I don't know when I'm going to get the research for November. But we are in a time of positive seasonality where the 31st tends to be more positive. Actually, you could count the 30th, which just finished, and the 31st together. So what's our outlook for Tuesday? We are dealing with earnings season. Apple's going to be coming out on Thursday. We'll have to see how they try to front run that, and then what happens after they release their report. The UAW strike is showing some promise now. They have a tentative deal, not only with Ford that already happened, but it looks like with GM and Stellantis as well. Okay, I'm hitting the wrong button here. The Israel situation, we're still wondering if that's going to escalate. Over the weekend, it was announced that they're entering a new phase, or the next phase of this whole process. And there's a lot of different things going on all over the world, different protests. And it's really, we're just keeping a close eye on that to see how it will impact the market. The Bank of England will end up meeting on Thursday, and our technicals are negative, and we're still below this longer-term support. We're wondering if some kind of a base is forming. We're not really seeing anything right now yet to really watch that, nor are we seeing any explosive growth up out or explosive movement up out of that. that's kind of what we're waiting for. But at the same time, we want to be aware of this stealth improvement that could kind of sneak up on us and show things turning more positive. We will get the Chicago PMI, the Employment Cost Index, the FHFA Housing Price Index, and the S&P Case-Shiller Home Price Index. So we're going to get some real estate information on Tuesday, as well as consumer confidence, and then keeping an eye on all the different geopolitical events. Here is the economic calendar, where on Wednesday, we're going to get ISM Manufacturing. That's a big economic report. And then at 2 p.m. Eastern time is going to be the FOMC rate announcement. After that will be the press conference, and you can believe they're going to hang on every syllable that Jerome Powell says and try to interpret it some way. Then on Friday, we're going to get the big employment report, as well as the ISM non-manufacturing index. Looking at the Stock Traders Almanac statistics, we're neutral to negative with the Dow, but we're neutral to positive for the S&P and the NASDAQ. We will be on the last trading day of the month, which is the 22nd trading day, where during an election year, we do see a little bit of positive action here quite often. So we're coming right up over to the right side of this red box here, where are we going to continue to see some kind of a bounce out of this? The Carson research, and I'll be shifting all this forward as we go into November. Also wondering if we're going to get more of a bounce from the NASDAQ, as well as the S&P going into the end of the month. We do tend to be up more than down with the S&P going back to 1950 and looking at just pre-election years. And Bitcoin is falling back just a little bit now, where I guess on this chart, yeah, it's not really all that changed. It got up into the 35,000 range, fell back into the 34s, and it's still in the 34s. So our scenarios, we have to go with the down one right now. The evidence is strongly in favor of things going lower. We are negative with all of our charts. We're breaking below and still below longer term support. We can't really justify being in an upward trend right now. We do have seasonality. We had a nice little bounce on Monday, even though it lacked a lot of strength. We're going to be waiting to see if there's more confirmation of things turning positive. We're not going with the sideways trend right now because both our short and intermediate term ADX charts suggest that we are in a trending environment. The warning signs, the daily special K chart is now looking more negative. The longer term equity put call ratio is going up. That's negative. The risk on posture still is showing weakness. The equity put call ratio based on 5 periods is going up. That's negative. On a momentum basis for the S&P and the NASDAQ 100, we continue to be negative. The BPI for the S&P is below 30, as well as now the NYSE. The Vortex and the parabolic SAR charts continue to be negative. Our longer new high, new low study continues to be negative. The Russell, the small caps, and the mid caps, they have just generated recent death crosses. The financial sector just generated a death cross after Friday, so that's turning more negative as well. Positive signs, very short list. The Pring bottom fisher, but that could be rolling over. And longer term, small and mid cap growth continue to be positive, even though they're pretty much chopping sideways. Our conclusion, we are negative. We're in a confirmed trend. That trend is negative, and we remain below longer term support. In the short term, we're just looking like we're working off being oversold. Now, that could change. A good solid up day, a real up thrust in volume, a real explosive move, that could switch things back more positive. We're just not seeing that yet. Intermediate term, we're still below longer term support, and we're still negative in the long term since we're below the 200-day simple moving average. Thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.